What's going on, everybody? Welcome to Wednesday, February 26th, 2025 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. First up, green swindle loses again. EV Automaker runs out of juice. The story of Nikola and the trucking business. We will cover all that. And then finally in the news segment, New York's net zero dream unravels as utopian climate plans face lawsuit woes. I will then jump over, quickly cover what happened in the oil and gas markets. Oil prices kind of fell off a little bit of a cliff today. We'll cover about why. And then the two earnings I want to highlight. One, Civitas, mainly because their stock absolutely cratered on some news that maybe not be related to their actual stock price. But then as we jump over, we will also look at Chord Energy, who we've talked a little bit on my Deal Spotlight podcast, and we will dive into all that and a bag of chips, guys. As always, I am Michael Tanner, rocking a solo show today. Stu is out on assignment. Let's go ahead and kick this off. All right, first up, green swindle loses again. EV Automaker runs out of juice. If you guys don't remember Trevor Milton and his hyped up Nikola, they were supposed to be the EV replacement for semi-trucks. They were kind of a splash competitor up there with Tesla. They went public, if anyone remembers, in the hype of June of 2020, with their market value jumping all the way to $27 billion. We actually had it higher than Ford, even though they had really not sent a single vehicle. But a lot of stuff turned out to be pretty false there in 2022. Their founder, Trevor Milton, as I mentioned, went to jail for fraud. Their infamous vehicle rolling down the hill was actually doing just that, which was rolling. They were supposed to have 1,000-mile ranges on all electric trucks. The issue is they only actually delivered about 500 of the 14,000 promised trucks, and they had to recall about 209 of them over battery fire issues. The median price tag on these trucks was $350,000, which is about twice the speed of an internal combustion engine. And so they finally, even after firing him, trying to reconsolidate, have gone bankrupt. And it's pretty crazy. And so it was, again, pretty unbelievable what happened with them. You talk about going from $27 billion all the way down to zero now to basically be sold for parts. It really goes to show that these automakers, Tesla being, I think, the exclusion of this, all these automakers that are other than the normal established ones really trade at these really crazy multiples. I think this goes into kind of the green new scam that we're going to talk about. So let's jump over to the next one. New York's net zero dream unravels as utopian climate plans face lawsuit woes. New York was really relying on, theoretically, wind and solar to save its electrical woes, but they had multiple contracts to build very large wind farms to replace some of their fossil fuel generation, but all of them or most of them have already been completely canceled or rebuilt at a much higher and uneconomic prices, which is the minority. Basically, the reason why this situation has got worse is because since President Trump has taken place, he began dismantling the federal support and subsidies for these, which goes to show that these projects can't stand up without any subsidies. According to this executive order, which temporarily withdrew all outer continental shelf from leasing wind power, there are, basically most, if not all, of New York's offshore wind is actually on these leases, so they really can't actually build anything. But basically what this goes to show is that New York was relying on many billions of dollars to prop up wind, solar, and green. It's pretty unbelievable to see what's happened. To give you guys an idea, the New York State Climate Leadership and Community Protection Act of 2019 actually remains on the books. This statute commands the complete restructuring of New York's energy economy. I'm reading straight from the article now, to reach, quote, net zero greenhouse gases by 2050 with an immediate first deadline of 70% of electrical generation from renewables by 2030, though they actually never had a plan to achieve that. That was supposed to be on the book. So it goes to show you that all this green stuff was being propped up by subsidies. If by a stroke of a pen, a president, by just pulling away subsidies, can absolutely decimate an industry, it goes to show you really how much they do rely on subsidies and how it really can't hold its weight under scrutiny relative to other sources. So wind farms, they're falling left and right. Let's go ahead and jump over now and quickly look at finances, guys. Before we do that, we got to pay the bills. As always, thank you for checking us out here on the world's greatest website, www.energynewsbeat.com, the best place for all your energy and oil and gas news. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. You can hit that description below for all links to the timestamps, links to the article. Shout out to sponsor of the show, Reese Energy Consulting. Go check them out, guys. ReeseEnergyConsulting.com for all your oil, gas marketing, and LNG needs. And as always, guys, invest in oil.energynewsbeat.com if you want to become Billy Bob Thornton from Landman. But let's jump over here. Market headlines here, guys. S&P 500 down about a half a percentage point. NASDAQ down a full 1.2 percentage points. 2 and 10-year yields were now 1.7 and 2.3% respectively. Dollar index fairly steady at down about 0.3 of a percentage point. Bitcoin down to 88,000, shed about 3% or about $3,000 day over day. Crude oil, a pretty monstrous day, down about 3 percentage points, 69.11 as it currently trades right now as we record this, about 5:45 here Central Time on the 25th. Brent oil was down somewhat less, down to 73.19. Natural gas was down about 3 percentage points, all the way to $4.12. XOP, which is our E&P securities contract, was actually down 2.36 percentage points. So not a great day for oil stocks. Mainly, the part of the reason why prices are kind of down to its 2-month low has a lot to do with complications specifically from the U.S. economy. A lot of tariffs going on, specifically some weak economic news coming out of the United States and Germany. We saw consumer confidence fell to its lowest and sharpest pace in the last 3.5 years, with 12-month inflation going higher. With Trump's plans to increase higher tariffs, that has raised inflation worries around the Federal Reserve, which means they could keep interest rates higher, which is again going to slow economic growth and energy demand. Tariffs beginning on Canada and Mexico imports are scheduled to start March 4th, so I think people are awaiting that. He did have a quote that say they are on time and on schedule, which may boost oil prices by reducing supplies from both countries, so that was offset a little bit by that. We did see the fact that the deal between Russia and Ukraine that's being negotiated kind of without a little bit without U.S. or the Ukraine's involvement, but it is it's very interesting, folks, what's going on with some of those negotiations and whether or not anything will actually be accepted by Ukraine, considering they're negotiating upon their behalf. But we will be following that, and I think that's really what's driving prices. Let's quickly look over at Civitas, guys. They go ahead and release their earnings today. Pretty fascinating to see, basically, I think the thing to see here is that, their earnings were okay. I mean, you saw about 1.3 billion of free cash flow, net income at 151 million, adjusted net income at 171 million, operating cash flow at about 858 million, sales volumes of about 352 BOE a day, oil volumes of about 164 BOE a day, capex of about 279 million, and adjusted free cash flow at about 519 million. Stock got absolutely hammered, though, down 18 percentage points, shed about $9 all the way down to 40.35, really due to the fact that they, out of a whim, terminated their COO without cause, okay? And basically, T. Hodge Walker, the COO, was officially terminated without cause, effective immediately, the company said. He was originally their VP of their Chevron, of the Chevron's Rockies divisions prior to becoming Civitas COO in April 2023. So he can't even last 2 years. Not great there. They also did say they're eyeing a 10% workforce reduction, which means all not doesn't quite go well. Yay, cash flow numbers look great, but they're still eyeing a little bit of a dip. So the street didn't like any of those numbers. Chord Energy also dropped earnings today. They had about a decent quarter. The market didn't like it that much. Their oil volumes were actually up relative at the high end of their fourth quarter guidance at 153.3 thousand barrels per day. The funny part is if you look at that over a quarter to quarter, they actually shed about 5,000 crude oil barrels per oil per day, and they spent about 200 and $75 million in capex to do that. So I think the street, they were down slightly more than the XOP contract at 2.42 percentage points. So the street didn't really like those numbers. Again, shell business is hard, guys. You spend a lot of money to barely increase production, or in Chord's case, actually shed production. So, guys, with that, I'm going to let you get out of here. Short show for me. Appreciate you all checking us out here on the world's greatest podcast. Check us out, www.energynewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.